Quite often in the economy, as well as business sentiment and consumer confidence, is everything. So it was unusual to hear the Governor of the Reserve Bank admitting that the disorderly end of the pandemic stimulus program and its communications around that caused the RBA some reputational damage. Governor Philip Lowe has also warned of inflation hitting 7% by December and says he'd prefer to see pay rises with a 3 in front of them.
I'd been concerned for a number of years that the rate of wage growth we had previously in the 2 to 2.5% range was too low, meaning that it was going to be hard for us to achieve the inflation target, and it was diminishing the society's sense of collective prosperity. So I just think it's important to remember that the steady state wage increases in Australia should be around 3.5%. But if wage increases become common in the 4 and 5% range, then inflation, it's going to be harder to return inflation to 2.5%.
That's RBA Governor Philip Lowe. Here to dissect all of this is independent economist Saul Eslake. Saul, welcome.
Good morning. Thank you for having me on your program.
Let's start with inflation. The Governor repeated his warning of a 7% inflation rate by the year's end and says it'll take years to return to the 2 to 3% band that they've stipulated. We're already hearing from all sectors that inflation is hitting hard. It sounds like tough times ahead.
Well, it does, and Governor Lowe was quite explicit in warning Australians to expect further increases in interest rates over the rest of this year and perhaps into 2023 as well. He said that even with the 50 basis point increase in the official cash rate that was announced last week, that interest rates are still low. And in real terms, that is relative to the current inflation rate, they certainly are. So the financial markets are pricing that rates could rise by another 3 percentage points before the end of the year. That would imply a cash rate of 3.75% or thereabouts, which would in turn imply standard variable mortgage rates of over 7. I'm not sure that the Reserve Bank intends or needs to raise interest rates by that much, but certainly interest rates are going to rise considerably more from their present level. And the Governor doesn't want that to come as a shock to ordinary Australians. But he also, importantly, wants Australians to understand why the Reserve Bank is doing this. And that's why he placed so much emphasis yesterday, as central bank governors all around the world are doing, on the importance of keeping inflation expectations low. Because one of his key messages and one of the important lessons from the stagflation experience of the 70s and 80s is that if people in their roles as both workers and consumers and businesses expect inflation to remain high, then they will behave in ways that make it more likely that inflation stays high and therefore requires even bigger interest rates and carries a greater economic cost to get it back down again.
He also was at pains to stress that domestic and not international causes of inflation are causing inflation in this country, which is interesting, right? In particular, labour constraints. Is the RBA posing a challenge to the federal government that there's something within their power to fix?
No, I don't think so. I think what Governor Lowe was saying here is that while the rise in inflation over the last year had its origins primarily in global factors, in particular the increase in petrol prices and more recently in food prices after the invasion of Ukraine by Russia, and by supply chain disruptions that are entirely global in origin, though obviously have some direct ramifications and parallels here. More recently, of course, we've seen the impact on the prices of a range of other food items of increases of the floods in New South Wales and Queensland, that's a domestic factor. What he's also saying is that in an environment of very strong demand, which is partly the result of very large amounts of both monetary and fiscal policy stimulus that have been applied to the Australian economy, like other economies overseas, in the aftermath of COVID. In that environment of very strong demand, businesses are finding it much more easy than they have done for more than a decade to pass these cost increases, whether they're globally or locally sourced, onto consumers in the form of higher prices. Now, up to this point, wage increases haven't played any material role in pushing inflation up. Over the last year, wages have risen on average by about 2.5%. That can't have caused higher inflation.
No.
The CPI to rise by 5.1% as it did over the year to the June quarter. What the Reserve Bank is saying, however, is that with the unemployment rate now at its lowest rate since the mid-1970s, and with firms finding it increasingly difficult to secure and retain the labour they want, the bargaining position between employers and employees is changing, and workers may find it easier to give and employers might find themselves more forced to grant wage increases that could lead to higher inflation. And that's something that was captured by that warning that you played earlier, that the increases in labour wages over the last few years have had no impact on inflation. And I don't think the increase in the minimum wage that was awarded last week will have a material impact on inflation, either as a once-off increase for a relatively small proportion of the workforce. But if we were to have persistent wage increases of 4 to 5%, especially given that productivity growth in Australia is so low, only 1.5%, then that would make the Reserve Bank's task of getting inflation down harder. If you take at face value what Governor Lowe said, that in effect the Reserve Bank will do whatever it takes to get inflation back to 2 to 3%. What having persistent wage increases of 4 to 5 would mean is that whatever it takes means bigger increases in interest rates that in turn carry a greater risk of pushing the economy into recession, which the Reserve Bank doesn't want to do. But like central banks in other countries, it doesn't really know what level of interest rates would carry a significant risk of pushing the economy into recession.
Saul, thank you so much for your time. That's independent economist Saul Eslake.
Think bigger about the world we live in. Ask your smart speaker to play ABC RN.